Indian financial services is actually a major focus of the Bain Capital platform in Asia for really two key reasons. One, the underlying growth fundamentals of India, which many of your viewers will be familiar with, creating a real demand for financial capital. But secondly, just the structurally underbanked nature of the economy means that there really is a structural need for innovative finance platforms like Adani Capital. This specific business, to answer your question, sits in a segment, as you mentioned, small lending to micro SMEs, the agricultural space and affordable housing, which actually benefits from some of the best demand-supply dynamics. There's really structural growth trends, but the granular nature of that lending makes it difficult for the traditional banks to access. And therefore, platforms like Adani Capital can generate very attractive unit economics.
All right, I can see that the economics is clearly, for Bain, the key consideration here, but we have to address the Hindenburg Report and the overhanging political and cultural elements that and headwinds that Adani is facing as a group and as a person. How have those played into your calculations?
Well, the transaction we're actually completing here is to acquire from a sales process the Adani Capital Group, which is a smaller subsidiary of the wider Adani Group. As you mentioned in your introduction, founded and run by Gaurav Gupta very successfully. And our transaction is a controlled transaction. So on a go-forward basis, this is a business that will be controlled by Bain Capital in partnership with Gaurav Gupta and run by us for the long run.
So in terms of, and I suppose, because I can understand completely the rationale behind getting into this kind of microfinancing, there's obviously a severe underbanking problem when it does come to India. But the question that I then have to ask is, how does this service that community better than, say, a DeFi or, other options? Because I would imagine that, you're looking for a return on your investment. Are you not concerned that, it's very easy for, peer-to-peer lending or other players to get into this business, especially considering it's very easy for like a startup to jump on? You know exactly what I'm talking about, right?
Yeah, of course, as we look at any investment, we always consider competitive threats. And I will say that this business actually operates across, I think, 6 or 7 states in India, has a diverse branch network to actually access on a personal basis the underlying consumers of these loans, which are the owners of SMEs and consumers directly.